Namaskar, greetings friends. Today I'm going to talk about two very useful chart patterns which are used to identify reversal of a trend. These are number one, head and shoulders, and conversely inverted head and shoulders, and two, double top and conversely double bottom. I will also talk about certain nuances in reading these patterns and applying them to your trading decisions. But before we do that, a quick word of statutory disclaimer. The information being shared in this video is for educational and informational purposes only. It should not be construed as an investment advice. Individuals are encouraged to do their own research and assume full responsibility of any actions taken based on the suggestions provided. Now, before I go into charts and describe what a double top or a double bottom is, or what a head and shoulders or inverted head and shoulders look like, the most important thing that one has to remember is that both these patterns are reversal patterns, which means they are at the end of a particular trend. So the fundamental requirement for looking for these kind of patterns and applying them is that there has to be a trend in place prior to you looking for a reversal. You should not be searching for these patterns in the middle of a trend or at the early stages of a trend. I'll be using charts to illustrate and identify these patterns. I will start with double top and double bottom first. Let's go straight into the charts. The first chart I want to share with you is the chart of USA 500, which is S&P 500. On this chart, as you can see that there has been a long-term rising trend here. So the very first condition of looking for a double top or head and shoulders is met in this one. Now, if you look at this structure here, from this swing low to the next swing high, another swing low, which was a higher low, swing high, and then back. Let me just draw this so that you can clearly see it. From this low to this high, back, next swing low, next swing high, and then back here. This structure here, from this swing low to swing high, next swing low, another swing high, and then back. The key point to note here is that the trend failed to make a new swing high as depicted by this line here. Yeah. And then not only it failed to make a new high, it also broke this latest swing low here, which I call as the neckline of the overall structure. So when price forms this kind of a structure, that is, after a long-term trend, it fails to make a new high, and in coming back, it breaks below the recent most swing low, then it confirms the structure called double top. Why is it called double top? Because it makes a top here and another top here and then breaks down. The second top should not breach this, because if it does, then by definition, it has made a new high, and that indicates continuation of the trend. So this is quite important, that it should not breach the previous high. This swing low should be lower than the previous swing low. Okay, so these are the conditions. And if you look at it structurally, forms like a letter M. Now, as investors and traders, how do we respond to these kind of situations? So when we see break of a double top, number one action we should start thinking of taking is that if we are invested in the index itself, that is, we are long index, then this is the point we should start to close our position. And if we are trading in any of the constituent parts, it gives us an indication that we should try and keep a close eye on those stocks. And if the stocks are also forming a similar structure, then we should start taking some profits or reducing our exposure at these kind of points. If you are in the business of shorting the markets, then again, these are the points when you can initiate short position, because this overall long-term trend has been broken. Before I move to an example of a double bottom, let me make one more point here. Now, this second top, I've said that it should not breach the first top. Now, that is important condition. Can it be lower than the first top? Yes, of course, it can be slightly lower than the first top. It need not be exactly at the same point. So you could have a structure where this M has got the second top, which is slightly lower, which means it will look slightly sloppy. That is fine. Let me see if I can draw two different types of double tops for you to make the previous point clear. So as you can see in the first structure, the second top is more or less at the same level as the first top, but in the second structure, the second top is lower than the first structure. So slightly sloppy M, but that is fine as long as it meets the condition of the second top being either at the same or slightly lower than the previous top, then the structure is fine. Next, let us look at an example of a double bottom, which is just the opposite of double top. So in this case, the first condition is that it has to be after a long-term downtrend. Now, if I look at the price action from this point onwards, Tesla has been in a steady downward trend. It is not as long term a trend as the previous example. Nonetheless, it has been in a downward trend. The current price action here is forming a swing low, went back up, formed another swing low, which was at a similar or slightly higher. So that means the previous low was not breached, and now the price has started going back up. So it is in early stages of forming what I would call as double bottom, but it will be confirmed only if the third condition, which is break of the neckline, is confirmed. Neckline in this case is here, which is the latest swing high. So only if the price breaks this line, then it will confirm this pattern as a double bottom. It's an example which is kind of still forming but not complete yet. But and if I draw the picture here, it will appear like a W, which is just a mirror image of M. The other pattern that I'm going to cover in this video is head and shoulders. It is very similar to the double top pattern with a slight difference. Let me first show you a picture of the difference and then we'll go to the charts. On the left here is double top, as I have just shown you in my previous example, top 1 and top 2 and a neckline. In the head and shoulders, you will see three tops. Top number 1, top number 2, and top number 3. So there are three tops. The key point here to note is that the second top is higher than the first top. The third top is lower than the second top, forming what looks like a head and shoulders, two shoulders. So these are the shoulders and this is the head. And that is why it is called head and shoulders pattern. The neckline is the lower of the two swing lows here. So whichever the swing low here is lower, that will form the neckline. And the condition of break will be the same as breaking the neckline. Now, in terms of interpretation of this, the price after a prolonged uptrend made a high, a swing low, another higher high, which up till this point indicated continuation of the pattern, then a low, which could be either higher or lower, doesn't matter. But then the third top failed to breach the previous top. And in coming down while making a swing low, it reached both these lows. So that is when the head and shoulders form. Now, often when you look at the real charts, the picture will not be perfect, as in, these two shoulders being on par with each other and head right in the middle of these two shoulders. It need not be this perfect. What I mean to say here is the shoulders could be at slightly different levels. As long as neither of them is breaching the top head, they are fine. In an ideal circumstance, I would like to see the second shoulder to be slightly lower than the first shoulder. That basically tells me that the price has not only failed to breach the head, the previous top, but it is also struggling to breach the previous shoulder one high. So that is a better indication of the breakdown of the long-term trend. The opposite of a head and shoulders is the inverted head and shoulders. Principles are the same, but this one appears at the end of a long downward trend. So it forms these three bottoms. This bottom is the lowest, which is the head. The left and the right are in such a manner that they are both shallower than the head. The neckline is formed by the higher of the two highs here. It need not be a horizontal line like this, it is. And then the break of this head and shoulders pattern will be confirmed after the neckline is broken, which is the higher of these two highs. So that's how your inverted head and shoulders will form. We will now try to find some patterns in real charts. Luckily, I found a very good example of head and shoulders. As you can see, a long-term rising trend. And here, if you look at this structure, so this is your left shoulder, this is your head, and this is your right shoulder. The neckline on this will be the lower of these two lows. So this one here. That's quite important. These necklines, need not be perfect, but you have to draw it in such a manner that in case of a rising trend, it is the lower of the two lows. So that is your neckline. So this head and shoulders was broken at this point here when it broke below the neckline. Not here, not when it broke the low here, but when it broke the lower of the two lows, which is the neckline here. That is when the head and shoulders as a reversal pattern got confirmed. Whether you take profits on your previous long positions or you start a short position here is the decision that you have to take. But this is where confirmation of head and shoulders being broken happened. Another decent example of head and shoulders is this chart of UK 100. As you can see, it had a fairly good run on the rising trend. And here at this point, it made a head and shoulders structure. Let me try to draw it for you. So the head here, left shoulder, right shoulder. The neckline will be the lower of these two. So the neckline will be here. So as soon as the price broke below this, your head and shoulder pattern was confirmed for a downswing. As you've seen in the example charts, these patterns can be really useful for making trading decisions, whether it is reversal of an upward trend or a downward trend. But as I always say, this trading is a business of probabilities. And in order to get probabilities in your favor, always try and use more than one indicators and factors to come to a decision. I'm not advocating complicating it too much, but have a good balance of a few indicators or factors to aid your decision making so that you have better chance of succeeding. Hope you found this useful. If you like the contents of this channel, please subscribe and like, and also share the contents with other people who might benefit from this. Thank you. Namaskar. See you soon.